Hello to everyone on today's webinar and welcome to our meeting highlighting the main findings of our most recent report releases, the CW Global Trade Price Cement Report, covering not only the trade price of cement but also the domestic price of cement and the trade price of clinker, white cement and slag. We are happy to come to you today with the 2Q version of this year, of this report, the result of closely tracking the trade market for cementitious materials in terms of volume traded, prices, and of course, changes in the current status quo for more than 70 countries worldwide. My name is Rauka Cercel, and I will be joined by my colleague, Tea Vukicevic, the lead analyst for this report, in a short while, and she will walk you through, let's say, the highlights of our findings for this quarter. Myself, I will just introduce you to CW Group. Pretty sure most of you on today's call are already familiar with us and with the type of work that we do. And I will also give you let's say an overview type of information on the global cement trade price report and on the methodology that goes into getting to the findings of this report. So let's get started. Like I said, or I hope, we are already a familiar name for most of you in today's call. We are CW Group, a advisory boutique dedicated to providing our clients with the right, accurate, and forward-looking market intelligence that they need, and let's say often the one that they don't know that they need, meant to help them stay one step ahead of the competition, be able to grow their business, and incorporate knowledge in an effective way in their everyday operations and strategy. We provide market intelligence through, let's say, 3 different levels of detailing, and we can start now with the advisory bubble here. In this framework of our let's say organization, we deal with, let's say, very peculiar or particular problems that our clients may have, be them that they're from the cement space, steel, chemicals, fuels, bulk shipping, and so on and so forth. Just to give you a couple of, let's say, examples of projects that we have had with our clients from all over the world, we have helped them with M&A support, commercial and technical due diligences, strategy formulation and advisory, procurement support for raw materials and feedstock, and of course every other sort of activity that falls under the management consulting umbrella. Like I mentioned, we work with companies from very different scopes of business, though at the moment, let's say, our biggest pool of clients are still from the cement industry, which enables us to have a very extended network of let's say, connections and friends all over the world. And just to give you an idea of our, let's say, geographical reach, we work with clients from the Middle East, Latin America, Africa, North America, and of course, Europe and Asia. So we're quite in touch with everything that's happening across geographies, and that, of course, helps us further on in our other area of activities, which is the research branch. Now, our goal here is to create what we call syndicated intelligence. So these are market intelligence products that can be marketed to a wide pool of people, of course, with different levels of customization, and that depends on what the client needs. We're always happy to deliver on that. Now, the report that we're looking at today, and it's one of the oldest reports that we've been doing ever since we started as a company in 2009, is part of the research, let's say, field of activities. And so is another report that perhaps some of you today are familiar with, which is the Cement Volume Forecast Report, which is something that our team of analysts is working on at the moment. It's a twice yearly report where we look at more than 50 markets around the world and forecast their cement production, consumption, capacity for the next 5 years. Quite an undertaking. So I'll use this opportunity to invite you all to take part in our webinar in probably October on the volume forecast report. Of course, all of our research products in the report area and the market intelligence area for the cement industry are interrelated and correlated, and their existence enables us to have a very steady and useful database and crossed information that helps us deliver the reports that we do. It's not all data, of course. There's a lot of qualitative work that goes into our studies, and compared to what else is there on the market, I would say that's what sets us apart from our competitors. Like I said, through our work and through our work trips and conference attendance and so on and so forth, we were able to create an extended network of sources. And we are not, let's say, afraid of making these relationships fruitful for the research part of our company. That's why all of our studies are informed through primary research as well. And if I were to compare the secondary percentage of inputs that goes into our reports to the primary one, it's really interesting to see how in the last couple of years the share has gone to way more on the primary research side. So that's something that we really think sets us apart and has constantly delivered above our clients' expectations. Now, to look at our last segmentation of our company, we're looking at the news and media part of our company, and perhaps some of you on today's call are familiar with semweek.com or with our other platforms covering the bulk market, coal, paper and pulp, petcoke, and building materials. Now, what we're trying to do here is to be a lead disseminator of news on particular industries, such as the one that I just mentioned, for industry professionals, such as yourself, but also for financial institutions and hedge funds and investment banks and so on and so forth. One thing that, let's say, is a unique selling point for our platform of news compared to others is the fact that it is the analysts themselves, the ones who are daily in the grunt of the report making and advisory projects. They are the ones that daily go into the editorial part of underlining what it is important for the media team to cover. So that gives the media team an advantage, and that's the advantage of knowledge and then always being connected to what's happening on the market. And this is an advantage that few other specialized media platforms have in this space. Well, that being said, and to move on to the overview of the report Thea is going to be talking about today. So we're speaking about the Global Cement Trade Price Report, which over the years grew with a lot of care from our analyst team to not cover only the trade market, but also the domestic market. And you will see both in today's presentation and in the pages of the report how a big chunk of the report is dedicated to domestic pricing, specifically to ex-works and retail pricing, which we report in dollars. And over the years, we have put more and more effort to make this part of the report a consistent and really informative chunk of the report for our clients, for the simple reason that it just provides the right context to understand what's happening in the trade price situation. It's, let's say, it gives the necessary elements to read between the lines and understand even further in depth the reasoning behind the fluctuation of trade prices. Now, in terms of trade prices, we cover gray cement, white cement, clinker, slag. We look at over 70 markets. Not all of them have the same price indicators, as I will show you in a bit. But we look at volumes, we look at prices, and we, of course, look at trends. We're really not interested in creating a report that's just a blunt set of data. There's always a qualitative explanation behind any price fluctuation, and we find it our responsibility to make that clear for you. That's where the smarts are, not in just presenting the data, of course. Now, in terms of coverage, we release this report every quarter. We look historically at the past 9 months, and then we estimate the current quarter prices and volumes, and we also forecast the next quarter. And I will explain in a bit how does the forecasting actually work. Now here you can see actually a more, let's say, detailed breakdown of the table of contents of this report. Like I said, there are several dimensions to this report and, let's say, angles of analysis that we have been adding over the years, every quarter, basically, in an attempt to perfect our approach and to perfect the rigorousness of the study. And I think this is something that has been confirmed through the fact that subscribers to this report have been returning to us each year. And now to go to the methodology that's at the foundation of this report. Now, given the availability of data on trade prices and also on domestic prices, this report requires a lot of analysis targeted at estimating price points to the current historical period. Now, all the estimations and the projections that we make are done using a country-by-country, product-by-product, and flow-by-flow methodology. It relies heavily on both a regression methodology and on a qualitative, primary research-informed one. And as you will see in the pages of the report and in the charts that will show today, we make it very clear what values are estimated by us, what is preliminary, what is forecasted, just to eliminate any sort of doubt or misunderstanding. Now, in terms of coverage, I hope you'll not be too confused by this map. Since there are so many types of price points that we cover, so we're looking at FOB, CIF, CFR, Ex-Works, and retail, naturally not all of the markets that we look at can have the same type of coverage. Hence, the darkest blue on the map signifies that all of the price point types are visible for these markets, both in terms of historical data, preliminary and forecasted, whereas as we go down the color spectrum, the coverage lessens. If we were to compare this map to the one that we had last year, we would see quite a few changes in the sense that more countries have become darker towards the darker blue, and this is, of course, an effort that we're always trying to make. We're not, of course, trying to do it in a foolish way, even though we know that would probably please a lot of our clients. We don't find it, let's say, safe to venture into estimating certain price points for very difficult markets, just because we don't want to fall into this trap of providing erroneous information. So let's say we're trying to be quite conservative in that point, but still, always unlocking new sources and new contacts that can help us better understand the gray areas. Let's put it like that. Now, that being said, I will turn to Thea, and I'm sure you'll find the conversation with her much more interesting than you did with me. She will bring forward some of the main highlights of this report. And that being said, thank you for your attention, and please keep on the line. Thea will take on in a sec.
Hello, everyone. Thank you for joining us today. My name is Thea Vukicevic. I'm Associate Analyst with CW Group, and today I will walk you through highlights of our latest update of our price report. We will go through some demand movements. We will talk about FOB pricing, domestic pricing as well, and of course, future outlooks for both. So first, let's take a look at demand movements and in domestic markets and how did they behave in the second quarter of this year. Globally, cement demand has been improving in most of the markets, as we anticipated also in our volume forecast report a couple of months ago. Before I get into this slide, I would just like to remind you that currently we are working on a global volume forecast report where we will explain a cement demand for 58 markets worldwide. The report will come out in early October, end of September, so we are looking forward to provide you with that information as well. So, and now, regarding the demand movements in second quarter of 2018, we noticed that demand has been improving. Some markets, also like Saudi Arabia and Brazil, are still facing some same old issues, but some markets like China and Kenya, they witnessed some unexpected turns in demand course. For example, the Brazilian market actually started showing signs of recovery as we were expecting at the end of 2017. However, this year demand was clearly affected by a nationwide truck driver strike that actually paralyzed the industry during May, and it made nearly impossible to bring raw materials to the factories or to dispatch the finished products. And reportedly, around 70% of cement plants in Brazil were paralyzed during that period. That clearly affected the demand, and we are soon gonna see what future looks like in Brazil, if the demand will be able to recover until the end of the year as expected. Then in Kenya, for example, in Kenya was having really positive demand movements that were going together positively with economic outlook. On average, it was improving by 5 to 6%. But however, this year, after all political turmoil that was caused by elections, the country faced lack of investment, high uncertainty, a lot of infrastructure and construction projects were delayed. Other construction projects that were waiting for investments and that were supposed to start in 2015 were delayed as well. Therefore, the demand recorded a decrease of 7% if you are looking to the period between January and May this year. We expect this market to start stabilizing soon as this impact of elections start fading, as the government infrastructure plans start being put in action, but demand went quite down, more down than we expected. In Mexico, for example, demand has been increasing. It increased by 3% in period January to May, as compared to the same period last year, of course. But in reality, expectations were much higher. Actually, local producers are stressing that start of this year was slower due to the decline in construction investment, both the state one and private one. So uncertainty also over the results of July's elections. They slowed down the public works. They led many private investors to hold down their final decisions. Then worth mentioning is also Turkish market. Turkish market actually has seen a surge of 33% for the first 4 months of the year, as we compare it to the same period in 2017. This growth persisted in following months, like thanks to, I would say, a low base effect, since the last winter in Turkey was pretty harsh, and it hampered construction efforts and all that. And this winter was surprisingly good, so the demand grew, but not as much in comparison to 2017. It was a pretty big change. Now I would like to start to talk a bit about FOB pricing. This slide is showing long-term trend for FOB cement prices. As I always say, more precisely, this chart is showing behavior of median, top and bottom export prices on monthly basis. This average price is not weighted by volumes. It is just an arithmetic average, and that's why it differs from another price I'm about to show you in the next slide. If you take a look on to this chart and see how the prices have been trending, you can see that the median prices have been on increasing trend since January. In January, when they recorded an average around $63 per ton. But then again, they experienced a slight decrease in April 2018, when they stood around, let's say, $58 per ton. After that, as expected, it started increasing until the end of second quarter 2018. So these prices from second quarter 2018 are actually preliminary estimates that we will be changing more materially in the next update that will be in October, after we have confirmed actual prices for all observed markets. Then top prices are those for more expensive cement exporters. They have been showing mixed trends, kind of, with the less price recorded around, let's say, $155 per ton, which was in June 2018. As I have been always mentioning in our TPR webinars, markets that have most expensive cement are usually Canada, United States, Denmark, Luxembourg, and other similar markets. Then bottom prices, they have been decreasing lately, moving around $31 to $32 per ton. Lowest one was observed in January and February last year, when it stood around $31 per ton. And other examples of the markets with the cheapest cement are, of course, Turkey, Iran, Asian markets such as Korea, Vietnam, and Japan. If you take a look to the next slide, this one, here we can see how the global cement trade movements look like. And also the price in the chart represents an average of prices for all the markets that we have currently in this update in our set, which are weighted by volumes. As you can see on the chart, prices slumped in December 2000 and prices slumped in December 2017. It's pretty obvious, but then they picked up and continued being steady until June. In second quarter 2018, prices improved globally on a yearly basis. Increases were present in almost all regions. The biggest yearly increases were seen in Western Europe and Mediterranean basin regions, where we believe input costs continued increasing, as well as domestic demand, and they both contributed to price increases. Then the chart below, that chart looks actually at the global trade and four major exporters for the last quarter, with, of course, preliminary data estimates as well. The global gray cement export volumes increased quarterly through the second quarter of 2018, mainly due to seasonality and low base comparison when we look at the first quarter. Volumes that were traded in first quarter were lower than usual because of really harsh winter that affected construction sector in most of the markets, and also in some markets such as Spain or Latin American markets. Easter period slows down trade usually, and this Easter trade was cement companies were reporting lower volumes in Easter period. In second quarter of 2018, Turkey, Japan, Thailand, and China were the largest exporter of gray cement. Turkey actually replaced China as a leading exporter during this quarter, and China stood as the fourth largest actually. We anticipated in our previous report that traded volumes in China started decreasing as a consequence of the stricter policies regarding production and cement market in general. We have been always saying that soon Chinese market is not going to grow as much. Therefore, trade volumes in China decreased almost 50% on yearly basis. They reached around almost 1.5 million tons traded in second quarter of this year. And also as a consequence of lower trade and increasing demand for the China cement, export pricing increased around 18% on year-on-year basis. And prices, I would say, were around $54-53 per ton. Turkish exports increased quite 40% year-on-year. The country has been facing really strong demand from their usual popular importing destinations, and this quarter, those less popular ones like Haiti, Mauritania, Ghana, Brazil, they have been importing more cement from Turkey. When it comes to pricing, their FOB price decreased quarterly by almost 5%. And now on this slide, let's see how the forecast for gray cement trade prices will go. As probably you already know, our forecast methodology is time series regression, where we update our forecast coefficients every second quarter update and fourth quarter update of the report. And as Raluca already mentioned, not only statistical regression is input for our forecast, we also have a lot of primary research and a lot of qualitative information that has been inputted in these future outlooks. Regional averages in chart, they represent arithmetic averages, and they're not weighted by volume. So as you can see, we expect future pricing trends to be more inclined to the negative side. Standout decreases are expected to be seen in Middle East and Mediterranean basin region, while increases could be expected only in Asia Pacific, Japan, and North America and Caribbean. In Asia Pacific, Japan, global export pricing is expected to improve by around 2% by September 2018. We expect prices to be around 49 on average. In this region, a regional increase is expected to be affected with actually a big jump in pricing in Bangladesh and moderate increase in Japan, since the rest of the observed markets in the region, such as China, India, Taiwan, and Vietnam, are expected to see slight decreases due to still high competition and really strong demand for Asian less costly cement. Then average prices in Mediterranean basin region are expected to reach more or less $58 per ton, which is about almost 2.5% decrease in September 2018. The future increases in FOB rates in markets such as Italy and Spain, they will not be enough to drive the average up. Instead, regional price is expected to be lowered down by decreases in Greece and Portugal. Then, for example, Western Europe. Western Europe is expected to see kind of stable pricing with marginal decrease, but still stable. I'm saying marginal decrease when we compare September to June, but in general, pricing is going to stay around 82 dollars per ton. Most of the markets in this region are expected to continue seeing pricing recovery, but Austria is putting this average a bit lower because in Austria we are expecting to see 8% decrease quarter on quarter in September. Now, after FOB rates, I would like to talk a bit about domestic pricing. First, let's see the global picture and talk about trends in second quarter 2018 and to see how they behaved on year basis. So in second quarter of 2018, ex-works prices rose across most major markets on yearly basis, but on quarter basis, changes showed kind of mixed trends across regions. The map is showing how ex-works prices behaved in second quarter, and clearly the regions that recorded positive pricing developments are Mediterranean Basin, Western Europe, Eastern Europe, and China. Middle East and South America are still recording pretty low ex-works pricing. In Western Europe, for example, domestic pricing grew by 10% year on year. I'm saying regional average domestic price. It's favorable weather conditions, continued appreciation of the euro against the dollar, also renewed confidence in construction market. They all have led to the increase. The highest year-on-year increase within this region was observed in France and in Germany, I believe. And the regional growth in Mediterranean Basin, it was supported by strong pricing in Italy and Egypt. Italian market has been seeing signs of recovery despite all this uncertainty posed by political situation. The average domestic price reached almost $78 per ton in the second quarter 2018. The unpredictable impact of election results, it didn't really have an effect on pricing environment, and new investments in housing and non-housing buildings and slow recovery of domestic cement consumption really helped this quarter. On the other hand, markets that haven't been doing so well are Middle East ones and South American ones, such as Brazil and Argentina, or Middle East ones, for example, like UAE. The several factors led to a decline in pricing in UAE. Manufacturers were once able to sell cement at better prices due to exceeding demand coming from this construction sector, but now they are dealing with fierce competition and overcapacity, as well as rising energy costs. Now let's move to another slide where we are going to take a closer look to some specific markets. So I would like to start with the US. In the US, pricing has been pretty much stable, slightly increasing on year and quarter basis. But on the northeast and midwest side of the country, results were pretty much poorer than in the west coast. Cement manufacturers were recording below expectation results in first quarter in northeast and midwest as consequence of unseasonal weather conditions, which really did not help in the south either. But luckily, good conditions on west coast really helped to moderate those results. then again, worth mentioning is another market, Spain, where demand is increasing pretty rapidly, driven by residential construction in the south and public works reactivation in the north. Moreover, retail pricing in Spain saw an increase as well. Even despite heavy rains and Easter holidays, retail pricing stood at, I would say, about $165 per ton in June 2017. Then China. In China, export prices witnessed an improvement as well during the quarter. Prices stood at around $58 per ton, which represents more or less 4% quarterly. Cement producers believe that supply restrictions are creating a really good environment for price increases, and they have positive expectations for the future as well. Then to mention one more market, for example, Philippines. Philippines was market that experienced the highest decrease in export pricing on year-on-year basis. It was declared as kind of a poorest performer in Asia Pacific region, but however, on quarterly basis, prices started recovering. Countries saw 2% increase quarter on quarter in domestic pricing. Those improvements are supported by government's agenda that is really expansionist agenda, and includes large infrastructure projects that are improving demand, and also weather conditions in Philippines were also in favor of those projects. Therefore, we expect the recovery in Philippines. And now, as the last slide of our second quarter TPR update highlights, here I would like to talk briefly about future expectations in domestic markets regarding ex-works pricing. So, as you can see on the slide, future brings negative sentiment all across the regions, which we saw also earlier, translated in export pricing as well. Worth paying attention to are increases in med basing in China. In China, domestic demand is expected to grow, supported by large transportation investment and renovation plan in town areas, which intends to build, if I'm not wrong, around 5.8 million units by 2020. So we do expect some domestic demand growing in China. Therefore, this scenario, coupled with restrictions on supply, probably will push prices up in third quarter 2018. And then in Mediterranean basin, markets that will continue to drive this regional growth are Italy and Egypt again. Thanks to the new investments in housing and on housing buildings, Italian pricing is rebounding. But on the other hand, Spanish manufacturers are expected to decrease pricing in Spain in order to remain more competitive and to sell more cement. In Western Europe, for the third quarter of 2018, we anticipate declines in the market with traditionally high exports pricing. So, for example, those are UK and France. The construction activity is expected to be a bit slower if we compare it to the second quarter, as the vacation season takes its toll and as construction slows a bit down during the month of August. So, but in a long run, most of the Western European markets are expected to see positive demand developments, which will hopefully then translate in higher pricing. That being said, we are moving to our closing remarks, where we will just remind ourselves about a few highlights of the report, where global average FOB prices for gray cement were up 4% in second quarter 2018. Quarterly volumes increased as well. Then clinker FOB rates were up 10% yearly in the second quarter, but with volumes quite down, 14% down on yearly basis. And slag export prices were up 8% quarterly. So to conclude, I would like to remind you that the webinar that we were just having now, it's gonna be on our website. The recording will be on our website as well as our presentation. However, if you really have any questions, please contact us. If you want to buy the report, also you can contact us on inquiries@cwgrp.com or our emails, mine or Luca's. And just to remind you, this showed only few highlights from the report. Report is pretty huge, so there are much more to it. So if you are interested, please give us a hint, and thank you for listening and have a nice day.